The RBA today kept interest rates on hold for another month, and that's 12 months now since the RBA last reduced interest rates, which they did by 25 basis points. So the cash rate as of today stands at 2.5, which is still at record low levels. Now, what's happening in the economy at the moment is there's not a lot of data over the last month that we're seeing, but we are going to see some fresh data come out in regards to the June quarter over the course of the next couple of months. We're seeing commentary around employment jobs holding. We are definitely seeing some strong infrastructure being undertaken in the New South Wales economy, and that's going to flow through in their numbers. So we expect the New South Wales economy to be very strong over the course of the next couple of years. And again, we're also seeing that construction-led recovery trying to take shape. So overall, I'm really comfortable where interest rates are at the moment, and I wanted to spend some time in talking to you about the housing bubble, the conversation that's now starting to come up. We have seen that house prices across the country are pretty much at record levels, but let's not lose sight of what that means. That's a broad statement. When we actually drill down to some of the different state levels, we aren't actually seeing record sale prices. We're certainly seeing them in New South Wales, and Victoria in the Melbourne and Sydney markets have had really, really strong growth. When we're talking about the Brisbane market, we're starting to see some momentum in the Brisbane market, and that's obviously why we're buying properties in Brisbane at the moment as well. When we go to some of the other markets, we're seeing some signs and green shoots of growth in the Adelaide market, and we're also seeing something happening in the Tassie markets as well. As for the Perth market, well, again, they seem to actually be slowing down a little bit. We're seeing some mining consolidation, and the certain jobs growth that we saw over in that particular market over the longer term is now starting to soften off a bit. So we may see a plateauing of opportunity in the Perth market. In saying that, as I've always said before, there is opportunity in sub-markets in that area, so I wouldn't say don't buy in Perth, but certainly from a general perspective, we're not seeing that sort of general buy for the Perth region. Darwin's the same. We've had some big infrastructure projects. We're coming off the peak of those, and we're now starting to see the job market and certainly the rental market start to settle down a little bit as new supply comes on as well. So those particular areas across the country, overall, the commentary is quite bright and vigorous, and that's because of these low interest rates, meaning borrowing power is actually quite strong. So that's the message. We're not in a bubble yet. The RBA are very, very clear in regards to if they do see some signs of some aggressive growth in that particular market, they'll do everything within their power to change that. And they don't necessarily have to do that by changing the cash rate. We've seen in New Zealand, what actually happened over there is they introduced some peaks in terms of loan to value ratio. So they put some parameters around the lending conditions because that is what's driving value growth at the moment. We're seeing lending conditions being fairly reasonable in the Australian market. So if they wanted to change that without actually affecting the broader economy, they would actually change LVR levels for what people can buy. So they do have some other strings in their bow to help them out, and that's going to obviously mean that the economy can continue to keep building up momentum and getting our GDP numbers back where they should be, which is around that sort of 2 to 3% growth. Thanks for your time.